Ladies and gentlemen, welcome to the special interview. Today we have a returning guest to the show, Egon von Greyerz of Matterhorn Asset Management, located at goldswitzerland.com. And I got to tell you, if you've got your stack of gold and silver safe and secure in your house and you're ready to look for some offshore, out of the banking system storage in Switzerland, where the real big players hold their gold and their silver, you need to get in contact with Egon. That's for high net worth, deep pocketed individuals, because he has his finger on the gold market and can still source gold in quantities if your bank account has a comma and several zeros in it. Egon, I'd like to thank you for joining us again on Silver Doctors.
Paul, great to talk to you, and especially in these difficult times when we're all, isolated, or most of us anyway, somewhere.
It is.
But it's good that we can communicate like this anyway.
It is good we can communicate. I hope you're doing well, hunkered down here. We're hunkered down here, and we're kind of going stir crazy with school canceled and everything. My daughter just started high school, and her whole freshman year has just been terminated. So it is quite 2020. I have to say, I never would have imagined the year would have started like this, Egon.
No, that was a surprise. Yeah, I'm sitting on an Alp top, but I'm not freezing, so I'm all right too. No, what a start to a year, Paul. But of course, it wasn't totally unexpected either. As I've been saying, and I'm sure we'll get into that, I expected a major downturn in the world economy at this point and in markets, but I didn't expect the coronavirus to be the catalyst. And as far as I'm concerned, it is only the catalyst. It's not the cause of this coming or downturn that has started already. It's the cause is obviously the problems in the world with the debt market, the financial system, etc. But of course, this is Sod's law that when things go bad, they really go bad. And here we have the worst possible catalyst, which makes everything happen a lot faster, of course. Mm-hmm. So it's sad for the world. It's tough, and we don't know exactly how it's going to end. It's going to change the world forever, in my view.
Mm-hmm. And if we could start there, that would be a good place to start, Egon, because, when we ended 2019 and started 2020, kind of like the buzz was this impeachment that was going on. It almost seems like so long ago now. And then also we were on the brink of war with Iran, and then came along the coronavirus. So here's my point with that. My point is that, a lot of people are saying the coronavirus is the catalyst, but they're saying, but really, it goes back to last September when the Fed started doing the repo market operations. But you say that no, this goes back before September of last year. This goes back longer than that. So could you kind of just set the stage to kind of explain how we got to where we are today and what is unrolling in the financial system today, Egon?
Yes, my views and message had been consistent for the last 20 years, or even before that. But we went into gold in a major way for ourselves initially, and for some people we advised already in 2002 because we saw problems in the financial system. Now, there's a good time from the point of view of the gold price, which was $300 at the time. And then, of course, the first problem was the 2006 to 9 crisis. The banking system or the financial system almost went under then, but they managed with throwing tens of trillions at markets and to keep the world going, which was good, of course. But then what has happened is, in the meantime, they tried to solve a debt problem with more debt. So from 2006 to today, global debt has more than doubled. Mm-hmm, mm-hmm. And we still have, and derivatives are growing fast. I still think they are around 1.5 to 2 trillion, although the Bank of International Settlement in Basel say 650 trillion. But it's big enough, whatever the level is, and that. So when debt doubles and derivatives also go up dramatically, you're talking about risk going up exponentially. And that's where we are now. And that's why we consistently have said that this is not going, the financial system is not going to survive in its present form. And that's why we consider that, especially gold, to some extent silver, but we find for wealth preservation silver is too volatile, so we're primarily into gold, but we also do silver. But nevertheless, that we found as it's just a consequence of an extremely risky world, and it's in insurance and it's wealth preservation. We're not in love with gold or silver. We just think that right now, that is the thing that you have to own to protect yourself against what is happening now and what is coming. And as you said, then we got up to August, September last year. And then, of course, first you started with the ECB saying we will do whatever it takes. And then a few weeks later, the Fed started with the repos. And to me, that was such a clear sign there are problems in the financial system. Definitely, they're not telling us what it is, but there are major problems. Therefore, to me, this was as important a moment as when Nixon actually closed the gold window in 71, because I saw that August, September last year as the beginning of the very end of this whole cycle, which is now going to have a horrible ending, and we don't know how it will end, but it's not just the coronavirus, which will be with us for a very long time, but it's the whole of the financial system that's going to come under tremendous pressure. And we will have all the things that we expect out of this, which is failures everywhere, more and more money printing, and eventually I think we will have hyperinflationary depression, unfortunately.
Mm-hmm. Yes.
So that's what we're facing.
Mm-hmm. And, it's interesting because we're still, to this day and to this week, seemingly having this inflation-deflation debate. And I know you look at it as a hyperinflationary depression. But my question to you is kind of how you see this playing out, because this is how I see this playing out. I look at the creation of the Fed in 1913, and I call that like a slow hyperinflation over 100 years, where the dollar lost, 97% of the value? Then we have the 10-year print from the global financial crisis to where we are now, so call it 2008 to 2015. So my concern is that we could be entering the crack-up boom where we literally just lose those last little couple percents of value of the dollar, and then that could end up happening over the course of just a year, if this is what's coming. So what are your thoughts just that the inflation-deflation debate is still going on, and how do you see the hyperinflation playing out, Egon?
Yeah, so but you're correct that we are going to have simultaneously, and we're seeing it already, we're having deflation and inflation at the same time. So we have had, of course, although it's not measured in inflation data, we've had inflation for a long time, but it's just primarily asset inflation, so stocks, bonds, property, etc. So therefore, people haven't seen it as inflation, but it is actually massive inflation because we had an incredible expansion of credit and of debt, and so which was reflected not in the normal economy but in asset markets. Now those asset markets and those bubble markets that have benefited from this massive credit expansion, they are going to implode. So you will see deflation in those three areas, primarily stocks, bonds, and property. And if you measure it in real terms, which is the easiest way for us, because measuring it in paper money doesn't give you the real answer. So measuring it in real terms, which the way we look at it is gold, then I see these markets, stocks, bonds, and property, going down at least 90%. Some of the bonds will go down 100%, of course, because there'll be defaults. And that's going to happen, as you say, quite quickly. But then, so that's on the one side. On the other side, then you have now the coronavirus, which is the catalyst to massive money printing, and then now you're getting defaults and our problems in the economy. They have I don't know the U.S. Unemployment. They're talking about 34%. That's worse than the depression. You're going to see GDP going down dramatically, and people are saying, okay, when Corona is over, or maybe we'll have a vaccine in a couple of months, and then. That's not going to happen. This is going to change the world forever. And we're not going to have a short-term solution to this coronavirus either. So that's not going to be the remedy, unfortunately. Because you see what's happened now in Singapore, for example, has come back again. And it's come back with a vengeance. And now they have the longest lockdown of everybody until the end of June, I think it is. And I think that's going to come wave after wave of that. But again, coming back to the economy, so Now, the governments around the world and central banks, they've decided that they're going to print whatever it takes to try to save the economy. And both you and I know, of course, and anybody knows, and they know too, that you cannot solve a debt problem with more debt. And that's just what's happening. So that money printing, which is going to be thrown at anything that needs it. There'll be corporations that have been spending $6 trillion in America to buy back stocks. And to the benefit of the shareholders and the management, but they're going to ask for now contribution from the government and help from the government, in spite of the fact that they should really ask the shareholders to give the money back. And that's one example. I just saw Richard Branson today, who's got 5 billion fortune, whatever it is, but he wants help for his airline also, etc. So everybody's going to get it, and of course individuals are going to get it. And therefore, we go into the phase now, which I always expected, because that is really the precondition of hyperinflation. We go through the phase now. There'll be unlimited money printing, and remember, people think that inflation is demand-led. A lot of people think that it comes out of prices, going up because there's demand for products. No, inflation, and especially hyperinflation, every single event in history of hyperinflation comes as a result of debasement of the currency. That is that the money printing leads to the currency going down, and as you said, we've seen a slow debasement of the currency over 100 years, 97-99% of all currencies basically. But even if we measure since 71, it's still the same percentages. That all currencies are down about 97-99%, and even since year 2000, most currencies are down about 80%. So there's been a massive debasement, and now we're seeing the last phase. You said, so let's say that they're all down 97-99% over the last 100 years. Now we have only the final 1-3%, but the final 1-3% is 100% from now, and that's what we're going to see. We're going to see all the currencies go to the bottom, as we have expected, and so you will have, as I said, inflation or hyperinflation because of the currency debasement. So you will need a lot more money to pay for the same thing. At the same time, you will have some of those bubble assets, stocks, bonds, and property. They're going to relatively go down in price. They might, if we have hyperinflation, they might go up in nominal terms, but that's meaningless. That doesn't mean anything. But in real terms, they are going to collapse. So you will have, on the one hand, products like services and goods, especially food, etc. You will have very high inflation there, and then you will have the assets that have bubbled in the last decades here. They will come down. So that's a combination of the hyperinflation and deflation. Hard for a lot of people to understand, but that's it. That's normally the way it happens, especially if you wear these kind of bubbles. Now after that, when they have printed unlimited amounts of money and realize that has no effect, at some point, of course, you will have then a total deflation where everything comes down in price, and that will be at some point after the hyperinflationary depression, you will have, as I see it, a deflationary depression. So it's going to be extremely difficult times ahead, and a lot of people will suffer, and it's going to be very, very tough. I'm not a pessimist. I'm just all I do is look at risk. I'm looking at risk, and these are the risks I see. I think there's a high likelihood. I obviously hope that I'm totally wrong. I cannot see how I can be, because you cannot. This enormous debt bubble that the world has created for itself, with the help of obviously central banks, cannot be resolved in any other way. And actually, the only way long term that the world can continue to grow is if we get rid of all the debt. And you can't get rid of that. You can't get rid of it by printing more money. You can only get rid of it by letting it implode and defaulting, basically. So when the debt goes down, obviously all the assets that the debt backed will also come down. So we'll come down to a different level, and the world has to start again with green shoots. In the meantime, and during that transition, a lot of people will suffer. It'll be very, very tough for a lot of people. But again, as I said, we have the cycle, and the tops and the bottoms in these cycles are much greater than they should have been, because we've had for 100 years now, total interference in the markets. If markets had found their own tops and bottoms, you wouldn't have had these extremes, and it would have sorted itself out. But with this money printing and with this manipulation of all markets, this is what now central banks have created together with governments. And sadly, we have to go through now a fairly long and hard period of correction. But the world will continue, just at a different level. Everything is exaggerated today. People travel all around the world all the time, going on holidays, having gap years, have buying gadgets all the time, buying several cars, etc. There's not been real life in the last few decades. It's been a life just based on credit and living above our means. And we've got back to basics again, hopefully back to where the family again becomes the kernel of society and real values come back. So they'll have benefits also, although there'll be tough times in between. Yeah.
Yes, I'm looking forward to rebuilding, because my hope is that we can rebuild it under an honest system and not, as you said, just putting more debt on a debt problem there. Now, Egon, you've been writing about the disconnect between the paper market and the real markets, and you've been saying that, the paper markets, what you're seeing on your screen isn't really real. And we can talk about that as it relates to gold and silver, but also, the oil market is also blowing up, where we see that oil is now trading negative for Western Texas Intermediate. So it's just like the paper markets are going bonkers right now. So maybe either focusing on oil or focusing on gold. Could you explain what you're seeing, how the paper market is becoming disconnected from reality, and how you're seeing that as it has to do with actually the physical gold market?
Yesterday, I follow the oil market quite closely. We don't trade it, and I'm no expert whatsoever in the oil market, but of course, it's one of the biggest physical markets in the world, and therefore it's extremely important. And of course, what we've seen in that whole market with the whole of the U.S. fracking industry, which is basically totally unprofitable and bankrupt. And all of that debt in the fracking industry is now going to implode, and again the Fed will have to print unlimited amounts for that too, but they'll fail, and whatever the price is that they need, $60 or whatever it is, it's never been sustainable. No one has ever made profits out of fracking over an extended period. So that started to create an artificial market because it was subsidized heavily. And as I said, now then so oil came down just from $60 down to $40, and then overnight, or just a few, it halved to $20. And so yesterday afternoon, looking at my screen and looking at crude, then $20, and then as you say, a little bit later in the evening European time, so it was negative. And that's just unheard of. And I have some very, very close friend who's involved with oil trading. I thought, my God, I hope it's okay, because that people can absolutely lose everything there. So this was obviously an artificial situation where the May contract expired and its physical delivery, and there is oil everywhere in the world. They don't know what to do with it, and still they're trying to cut production by 10%. Has no effect because the consumption is down dramatically. More than that, and then there's even no storage for oil, so nobody wanted the oil, and that's why so technically it went down to as low as minus whatever $2, $3, $4, $5 at worst, and this is what happens, Paul, in markets today. There are no real markets. You shouldn't have a commodity like oil where there is still, even if the demand is much lower, that it goes negative. And it just shows you that there are no real markets, and we're playing with billions and trillions in the world in markets, in derivatives, etc. And there is no real price in these markets, and that's what's so dangerous. And that's going to happen in all markets. It's going to happen in the stock market, and in the property market. That if there's one seller, just take a house as an example. If there's one seller of a house in the whole country and no buyers, the house goes to zero. Even if it's only one house for sale, because that determines the price in the market. And we're going to see these kind of distortions now and this year and coming years and in all markets. And of course, Add to that that most markets are supported by debt. The property market is, the stock market is, the bond market is all debt. And that's why you're going to see massive collapses in all of these markets. And the same, of course, with the, as you started to mention, the precious metals markets, the gold and silver. I mean, there again, they're not, the prices are not real. Silver is whatever, under $15, and gold is just under $1,700. That's not a real price either. We see, I mean, demand, physical demand is just, relentless. Every ounce of gold and silver that's produced is being sold, and there are shortages. And now, of course, you know that the Swiss refiners who produce about 70% of the gold bars in the world, I mean, they've been closed down for 2.5 weeks because of the coronavirus. Now they're open again, but they're working at maybe a third capacity now, maybe 40%, because they have to be careful there because of the protection or precautions because of the coronavirus. The workers can't be too close together, etc. So there we're not producing enough gold at all, nor silver for that matter. And the U.S. Mint closes out. So the situation is totally artificial, and I expect similar happening in gold and silver to what we saw last night in the oil market. All of a sudden, you will have just the bottom coming out of the paper market in gold and silver, and physical shooting up dramatically. And of course these futures exchanges and the LBMA will not be able to deliver. And we hear already now that there are incredible pressures within the LBMA system because there isn't enough gold and silver around, and that's going to get worse. Of course, the physical side of that market at some point will explode, and paper will be worthless. So again, people got to be careful. I tell people all the time, don't trade paper, don't trade the ETFs in precious metals, because that's only paper. Some might have a little bit of physical behind, but probably that's been used 2-3 times the same gold to lend to the ETFs, etc., from the LBMA bank. So please stick to physical and keep it in a safe place. Because that's the only way you're going to survive. That what's going to happen, because markets are going to be absolutely impossible. Every market, as you know, in the world is based just on paper. Mm-hmm. Some have underlying values, but it's it's multiplied. The underlying values are being used so many times and multiplied into paper form that there won't be enough around for everyone. So you will see similar falls in all of these markets that you saw in oil yesterday. Mm-hmm. So people have got to be very careful.
And it's very interesting because we saw that with the silver plunging. I think it was it 11 something or was it 12 something? I can't remember where it bottomed to, but the price for like silver eagle coins at the individual dealer level went up between like $25 to $30 for one coin, even though the price of silver was plunging. Which brings me to my next point of just kind of how you look at gold, because I think we kind of look at it differently. Because my point is that if a person believes that governments and central banks have actively been working to suppress gold so as not to set off any alarms, then I think that there could also be a capital gain in gold when prices readjust. Although my understanding is you look at it more of insurance or wealth preservation and not necessarily for capital gains. So could you just explain how it is that you look at gold? And also, are you still considering silver for orphans and widows? I think I've heard you say it before. But do you buy into the fact that there could be massive capital appreciation in addition to just being an insurance or wealth preservation, Egon?
Oh, absolutely, Paul. That's the consequence of what I've been talking about now. First of all, on any basis, gold and silver are dramatically undervalued. If you compare gold and silver to just take U.S. money supply, you can take global also, but just take again U.S. money supply. I mean, gold today against U.S. money supply is at the same level where it was in 1970 when gold was $35, and the same level as 2000 when gold was about $290. and today at under 1700 is also at that same level because money supply has been going up, and gold relative to money supply has not gone up. So based on the money printing and debt creation that's taken place in the last, now I'm talking about a 50-year period, both gold and silver are dramatically undervalued. There's no question about it. So there will be an adjustment there. And then you have on top of that the supply and demand situation, as we just talked about, where there isn't going to be enough physical around, and futures exchanges and the LBMA system is going to default most probably. And therefore, yes, of course, to just explain what I mean by gold for the people that we help, Sarah, it is wealth preservation. It is actually an insurance against a rotten financial system. But I expect much more than just keeping up with purchasing power in both gold and silver prices, definitely in coming years. So therefore, yes, there will be a major capital gain also in the metals. And of course, as I said, we from the beginning told people that gold is really the real money, so therefore stick to gold, because silver is very volatile, and therefore you will not sleep as well at night if you have silver because of the volatility. And that's been correct. The swings we've seen are just dramatic. We all remember going up to $50 in 2011, and then down to 11, whatever. So dramatic swings. But right now, of course, at a gold silver ratio of 110 or to 114 now, it's just gone up actually, 114. And it's been up over 120. Of course, silver is very cheap now. So as an investment, there's a fantastic opportunity in silver. But again, I stress from a wealth preservation point of view, because of silver's volatility, I prefer gold because that is safer from my point of view, and what we trying to achieve. But the investment opportunity in silver, that's fantastic. Mm-hmm. So absolutely. This will be one of the most fantastic. Both of gold and silver will be a fantastic investment, as well as especially with gold preservation in the next few years.
And it's interesting, Egon, because in addition to that, when you talk about gold being extremely undervalued, one of the things that I think of is oftentimes the analogy comes that gold can buy a fine men's suit, but a fine men's suit costs thousands and thousands of dollars. A fine men's suit does not cost $1,700, Egon. No. At least the last time that I checked for a fine suit. And I don't own any fine suits, but fine suits are not $1,700. But moving on here, and then just the one more point, because I don't know if we explored this fully. So a lot of people are starting to think, they're seeing problems. People who might not have known about gold or might not have owned gold or silver for that matter, they're starting to think, okay, the stock markets are in trouble, the debt markets are in trouble. They're finally starting to realize that there's some alternatives out there. They might be starting to think about the real estate for the wealth preservation. But could you just explain a little bit further in detail why gold is better for wealth preservation, for insurance, than real estate or like housing would be? Because a lot of people think that they'd be safe if they bought a house and turned their bond holdings or their stock portfolio into a house or something like that. But why would gold or silver be better than something like that, Egon?
Well, people, it's a fallacy to believe that real estate is an investment in today's time. You have to remember that people have been now, for the last few decades, and especially in the 90s, people have been buying houses on basically no money down. I mean, they even got money to buy furniture for it. They borrowed 100%, borrow 105%. And still they're borrowing much too much today in relation to where house prices are going to go. So real estate, if you look at a house or somewhere to live, yes, then that's I think your own house should never be seen as an investment in the way I look at it. It has been because of the incredible creation of debt in recent decades, which has driven property prices to ridiculous levels. You take here in Switzerland, you can borrow 10-year money at around 1%. It's gone up a little bit now, but you could have borrowed it at 0.9 a few weeks ago. 10-year money at 0.9%. I mean, that's like free money, Paul. It costs you nothing to buy a house. $1 million property is $10,000. I mean, it's nothing. So therefore, property and people haven't worried about the capital because they think they'll never have to repay it. But so therefore, you have created enormous bubbles in property. So in my view, this is not the time to borrow money and buy a property. If you have a lot of money and want to buy a house because you feel safe to have your own house, that's fine, don't. But it's not going to be a good investment in relation to gold. As I said before, I expect property market to go down 90% or more against gold, that is in real terms, because it's just been now people believe that house prices go up automatically by 10% or so every year now. That's not real. That's not the way it works. Especially not if inflation is 2% or less. Because if that was the case, the property market can grow by that percentage every year. It'll become the only industry in the world. It'll be just property, and everybody borrows and exchanges properties with each other, and everybody makes money. It's not going to. That's why right now, I would tell any person who has money, don't buy property, who has cash available, don't buy property now. It's not going to be a good investment. Wait until it's gone down 50% or 75% or 90% in real terms, and then you can find real bargains, and that will come. I promise you, that will absolutely come. And therefore, it's just everything. All investments are timing, and it's just the timing is wrong to go into markets which have been going up exponentially for a long period of time, just due to free debt, basically. So it's as simple as that. You just you've got to get in at the right time, and property is not the right time now.
Especially what I'm getting from that is because we're at the end of that debt cycle, which is why this is not that right time. Now, Egon, as we're moving through spring here, moving into summer, I just kind of wanted to know for our listeners and for our viewers, what is on your radar the most? I mean, obviously, it's going to be like the Swiss refiners getting back to full capacity, or will the lockdowns end, or just in general, whether it's the gold market or the global economy or the local economy in general, what are some of the things that are on your radar as we move through spring and into summer here, Egon?
Yeah, that's an incredibly interesting question because, there's some things that you can actually do something about and some that you can't. And I tend to worry about the things that I can do something about, because all the things that you can't take any action, why worry about them? But for most people right now in the world, I think they will ask themselves, like I'm sure you do, and I do this, because young people look at probably coronavirus slightly differently. If you're a bit older, you are also have more risk, and I see the world is not going to ever be the same. We're not going to travel the way we have done. We're not going to live the way we have done. It's not all bad, because there's a quality of life, and as I said, being a small group of people, being family, and some mixed with some close friends, we're not going to be isolated forever, probably. So these are things that I think are and those are things you can't do anything about actually, but nevertheless these are interesting questions from the point of view, how is life actually going to present itself to us in the next, are we in next year or 2 years? It is going to be different, and people will have to accept that, and therefore we have to change our thinking. The Swiss refiners, I can't do anything about that. So either they have gold to sell, and we can help our clients, which we managed to do even when they were closed. We found gold for everybody, and still at decent prices. We're talking always about bigger quantities. We're never paying these premiums that you see in the US. Massive premiums, because that's really at the retail level when you saw silver at twice the spot price, etc. And spreads have gone up for everyone, but relatively we could find gold during this period at decent prices. So sure, that's a problem, but at the end of the day, we are going to have a position. If you talk about the gold market, it's going to be a time when it'll be impossible to find gold at these prices. And the only way that people are going to be able to buy gold is at dramatically higher prices. That's what's going to happen. So that's a concern for people who aren't already protected. Protect yourself now, because this is still the precious metals are massively underpriced now, and especially the physical. So get it now. But then, so that's a short-term consideration. But long-term, I'm thinking more about, what's the world going to look at in 1 or 2 years, and it's not a pretty picture, unfortunately. And as I said, I'm not a pessimist or depressive in any way, but I just know that this is going to be a major change for the world. But this too will pass in one way or another, like what everything does, and the world will go on, just in a different form. And we'll just have to accept it. And in the meantime, some people will suffer, or a lot of people will suffer, actually. But we've got to go through. We've got to go through this, and we will. So these are the thoughts that I have. They're more philosophical, if you want, because you can't. But there are, of course, you could say that some of us are more privileged than others, because there'll be people who don't have enough money for the next 2 weeks. Now, people haven't got a salary and have lost their job, and that's going to be dramatically difficult for a lot of people. But I also am a great believer in that human beings, if they want to, they can always find something. There are always opportunities, even in bad times. You find, all of a sudden, normal services will cease, and you can't, you can't travel, etc., and you can't get the services you want. But if you're clever, you set up your own little thing and you help a few people around you, and so that there are always ways if you want to. The worst is to just lie down and be totally paralyzed. But actually, we all got to fight. But that's what humanity has always done. It's just been too easy for everyone lately, because everything has been solved by credit. And those times are not here. Don't think that the government is going to continue to support you, because they're not. Because the government has no money. They have zero money. All the money that they print is absolutely worth zero. It's just for a little while. It has a little bit of value, but you find in hyperinflationary societies, and I take a Zimbabwe or Weimar Republic, the ones who stand nearest the money, the money press, where they print the money, like Mugabe in Zimbabwe. He got the first money and he changed it to dollars. Once he got to the people, it was worthless. And it's what's going to happen here also now. People think that all this money, I got money, it's worth the same as before. It's not going to be. It's going to come down in value all the time, and the government in the end, what they print will be worthless. And therefore, sadly, people cannot be dependent on government money, and therefore they got to think about, what else can I do? I know for a lot of people that there are not many opportunities or alternatives, but people got to think hard about that, because governments have no money, and the money they print will be worthless, and that's what people have to realize. It's a tough thing, because people always thought that government has to help. But government is bust, sadly.
And last question here, Egon, and I kind of circled it back, unfortunately, and I apologize for that, but I just want to get your opinion on this, because I forgot to ask this earlier. But, I think the European Union and the United States are similar in this sense. The states here are having a lot of trouble because tax revenues are plummeting, because of all these people who are unemployed and aren't going out and spending money. And the states can't print dollars. So on that same token, with the European Union, the individual nations can't print euros. So what does that mean in closing thoughts here for the currencies? Does that mean that this is really going to start to pick up speed once we start seeing that countries and states, for example, are going to start saying, hey, we need more money thrown our way because we have absolutely nothing to run our local governments as it is? Or how do you see anything picking up speed in the end for the final question there, Egon?
Mm-hmm. Yeah, and it's an excellent point. The European Union is called the EU, as you know, and I've started calling it the ED, the European Disunion, because we've found now that in pressure times like these, a lot of these international organizations or the corporation, or this is actually also became, sadly, also political organization and corporation, which it shouldn't have been ever. It should have just been a trade union, like it was from the beginning. But these corporations or unions, they only work in good times. In bad times, it's everyone for himself. And that's what we've seen now. And the UK was so right to get out in time, because now, it's an absolute disaster for you. You just take now fighting the coronavirus. Everybody is fighting for his own or her own country. Nobody's helping another country. You take Italy, how they were suffering. Nobody helped them. Everybody looked after themselves. And it's the same now with the money. Of course, Italy is bankrupt, totally bankrupt, and they've been hit harder than anybody else in Europe by the coronavirus. But and they are arguing for that you should have a fund for financed by the whole of Europe. But of course, the other countries refuse that. Germany refuses that. Holland refuses that, etc. So there is no cooperation. And you're right. It's going to. I mean, I've always been of the opinion that the European Union will break up because it doesn't work. It's not like in the US where it was created by immigrants who set up the country with one currency, one central government. Here you have people from totally all different backgrounds and different history, different traditions, different laws, etc. It was never going to work, the European Union, and you see that now in tough times. It isn't working either. So there'll be enormous tensions in the European Union, and the ECB, the European Central Bank, of course. They will now. I mean, they will have to print unlimited amounts of money, but in the end, they will fail also because the country, Germany, doesn't want to support the ECB to give money to Italy, for example. So there's going to be enormous tensions, as I said. And if I were Italy or Greece or even Spain, etc., I would say goodbye and then thank you very much. I'm not going to repay my debt. You can have it, keep it. That was I would do, and then create my own currency. That's the only way you can have control, because the whole of the European Union, that it's been to the benefit of the strong countries, Germany, Holland, North Scandinavia, etc., who've been able to take advantage of their strong industry and export industry, and it's like for Germany, the euro has been much too weak, so they could export. Whilst the Italians were not as efficient, currency was much too strong and they couldn't export anything, and therefore they suffered dramatically, and they just have massive debts because of the EU now. And so I think it's been a disaster for the Europe as a whole, and the sooner it ends, the better. And I think in connection with the next crisis, it will end also. And that's a good thing also. But again, the transition will be very tough, of course.
Once everybody gets back to work, there are going to be some serious monetary issues coming down the pike. Egon von Greyerz, I'd like to thank you for joining us again on Silver Doctors.
Paul, always great to talk to you. Thanks very much, and take care of yourself and your family.
Thank you. Stay safe out there, Egon.
Thank you. Thank you.